So welcome back everyone. So yesterday I showed you this one. In the previous video, right? We have seen this cell, and we didn't buy this ones because there was no setup at all. Yeah, according to our criteria, this is not satisfied. Even with it is stop loss, wide stop loss, we will not enter this one. Okay, not gonna happen. So next thing, what happened was this black box right there. The same thing, we cannot enter up there and put our stop loss down there. And then after that, we formed another black box. The same thing, we cannot enter this one too. So this is used only for TP projection, okay? Since we broke the downside, we projected to the downside. That's TP2, that's TP3, and that's TP4 right there, right? Then afterwards, I have showed you we entered this one for this black box right here, and aiming down there, and aiming this one's TP2, right? So down there, we wrote it down there, okay? And then I showed you another entry right there, a buy. We had a buy here, okay? Stop loss down there, we had a buy up there. But unfortunately, after a little bit of, we would take our partials at TP2 because TP2, look at this, you can use equal wicks because it has almost nobody. It is like a doji, right? So right there TP1, right there up there is TP2, okay? As up there is TP2. Near your entry, it is near your entry. What does that mean? It means you are not going to take partials. You are going to wait. You are going to wait for TP3, okay? For TP3, after it price hits your TP3, you're gonna trade your stop to up there, break even, and take partials at key level, which is TP3, TP4. Then after TP4, it is time to move your stop loss, okay? To move your stop loss up, right up to TP2, and then TP3 as price moves on to TP4, okay? Then what happened here? Then finally ended up being the settlement, okay? Ended up being the settlement. It actually hit TP2 after that, but that is essentially the settlement. It is a black box. We broke the downside, we melted, okay? Then the next thing what happened is we dumped it down there. What does that mean? I'm not gonna sell that one. I'm not gonna sell that one. After all, we have a black box here too, right? We have a black box on TP1 and TP2 down there right there at that week. Okay, so I would have entered a sale if price had rejected and came back up there. Okay, up there. Putting my stop loss up there, I would say that should aiming down there. Right there a sale. That's my risk, that's my reward. I would have done that, but the price didn't do that. I'm already in a sell position up there, so I don't even care. Okay, and then what happened is this one. We found another black ball, look, 2, 3. This is a bigger one, quite big. It's quite big. And this thing dumped down there. So in this case, we are not selling. I am only interested in selling if price comes right there, as that silver one, or even better at golden one. Okay, otherwise, I will not say high. It is because it is huge stop loss. I cannot risk that. Next thing is what? So you can see TP2 is still loading. TP2 is Not yet. What does that mean? It means it is inefficient. This black box is inefficient. I don't care if it is to the downside. I don't care if it's to the upside. All I care is it has to be TP. And once it tries to do that, I will be traveling with it. How? By entering a trade at smaller black boxes or at the retest subset. Price retest subset, I will be selling this one. Simple. Okay, then the next thing, black box another forward, no entry, normally TP projection. Next thing we found another one here, 1, 2, 3 here, no entry, not yet broken. Okay, that's it, simple. That's euro shape, that was euro shape. Now let's jump to gold. I didn't think gold would be like this. It is crazy. Gold, oh my goodness, look at this shit. It is crazy. So anyways, let's dissect it. So what is this? This is a black box, right? Why? This overlapped on the first candle. We traded down on the third cap price. We traded down. So most likely, 3.6% has been hit right there. Let me zoom for you. I think most likely right there, 3.6% has been hit. What does it mean? It is a valid black box. But I'm never entering a trade based off of the first model. Based on the real breakout, I will never enter. It is simple. No one can interrupt there and put the stop loss up there. That's crazy. So basically, we would anticipate this price to move just like this to the upside or the downside. I don't know. So if we will break the upside, then I would assume we can move to the upside. Okay. So what happened? Then what happened? The next thing is crazy. So you determine your tip. That's TP1. Since we broke the upside, that's TP1. I'm sorry, upside. TP3 is upside. Okay, still loading. What does that mean? It means if price comes down there, it actually came in as you can see. This is the silver zone, but I'm never entering with it up there, and my stop loss down there. That's not gonna happen. So this thing, as you can see, supported. As you can see, I told you 70% of the price will support this one. Okay, so I'm not interested. I have to wait. Patience is important right here. So if the trade is down there, I would be interested actually. Half of this week, if it touches that half, I would be interested to buy. That's my stop loss down there. This is my risk. This is my reward. Okay, that would have been good trade. And then what happened? We formed another black box. Okay, formed another black. Did we break? No. So what happened? Another here. Did we break? No. The upside? No. To the downside? No, not yet. Not yet. That's a little poke. No one cares about that. I don't care about a little poke. I would rather be patient and enter a quality trade than jump on every breakout that I see. That's not gonna happen. So number one quality that differentiates the black box strategy from the others is it has an edge. It knows where the red line is. Once that red line is crossed, it's time to engage. Otherwise, there is no movement. I will never move. So that's the difference. And then there are what? So these things that I pass, this black box are going to be used for TP projection. TP. And this also. And not that one. Because that's not a black box. Because that's not a black box. Okay. Then right there, Something peculiar happened. What? Look, let me zoom in. Something peculiar that I am interested in. I am interested in this. So I said, 2, 3. We tried breaking down. We tried. We really tried. We didn't. Up there, we tried. One more push. Finally, 2.5% triggered up there. Does that mean I'm gonna enter a buy? No. No way. Look. My stop loss down there entering a buy. That's crazy. That's stupid. That's a stupid move. So, in fact, what I would do is I would wait for it. It is simple as simple as that. Second model is here for us. It is here for us. So you measure it. Most likely TP2 is not it. I'm telling you. TP1, TP2. Like I told you, TP2 is up there. So it was never hit. Oh, it got near. Okay. It got near. Dump it. What is that place? Below the week. That's halfway of the week. I mean, actually, this one. What is this area? What is this area? That's the silver, right? That is 1 by y. This is my risk. This is my entry. This is my risk. This is my potential profit. Okay. At least 1, 2, 3, right? Yeah, 1, 2, 3. 1, 2, 3. Who wouldn't want that, bro? Who wouldn't want that? So next thing what happened was we smashed it down. So as soon as I see that market make a week, I enter the sell. I mean a buy. That's it. I based off of this black box here. A buy targeting TP top there, and if it goes up, targeting this symbol as well, that is dead. It is dead. Once it advances up, now my stop loss is at break even. Once it reaches it, after putting my stop loss at break even, now I take partial, 30% off. Okay, once it moves. Then after it is TP2, another 30% off. TP3, another 30% off. Then 10% will be running. Okay, that's beautiful. Simple. Never touch the stop loss yet. Until TP4 is hit and it is violated. Okay. And then what happens? Another one happens. This is not for entry, this is for TP projection. This is for TP projection. Since we broke the downside down there, what do we do now? We are projecting the downside like if actually TP2 is hit by that week. So not interested anymore. This is done. This is done. Okay. This is yet to be. This is yet to be hit. It's not done. Okay. We gotta wait. That's exactly what happened. Okay. That's exactly what happened. Then next is Aussie cut on 1 hour time frame. Do you check black box here? Yes. Well. 1, 2, 3. Is that a buy? I'll never buy that. Look, it is risky. What would I do? I determine my TP. Since it broke the upside, I'm gonna project it to the upside TP2, and then I would wait for just like these candles, red candles, right there. Bam. Targeting up there, I would enter a buy here. Stop loss still down there. My risk, my reward. Okay. Simple things over and over again. Simple. Nothing complicated. This is $1. It's $1 on 1 hour time frame. So as you can see, we had an answer backwards here. What is that? That's a sell. That down there is a sell. Stop loss up there. Let me zoom in. That riser my friend is a sell. You use equal highs. And the second lowest high of the first candle. This one. This one. Second lowest high and the second highest high. If they have equal highs, then we're gonna connect. So since we are determining TP for the third candle, we're gonna use the two previous candles. TP1, TP2 is down. Most likely TP3 is hit too. So you traders, since your TP23 are in the same area, you take partials as TP3. Take partials at TP4. If it hits TP4. After TP3, you trade also to break even. That's your entry price. Yeah. For the breaking candle. Okay, for the breaking candle. If you don't want to touch the stop loss, and if you think that it will continue down, or if you want to catch more moves, then it is better to leave the stop loss up. Okay, don't touch anything. And it's better to take partials at TP2 and TP3. If it is at your entry TP2, then leave that as one end. What profit would you take? You just entered. There is no profit yet, so that's when the price has to move. So you take partials at TP3. Simple as that. Finally, the price smashed up, tried to hit stop loss, came down again. One more time, it was a double top, then dumped. Right? Dumped. Hit that half of this week and look, that's crazy. That's crazy. Anyways, here, so right there, your stop loss will be hit up there. Up there, or up there with that week, your stop loss will be hit. You took 30% off, so it's okay. It's okay. You cannot win every time, bro. You can't. So there, found another one. Three. Then one more time. Do you break? No. You need a little bit more. You need a little bit more. We tried moving down, but as you can see, even the fourth candle didn't trade down, didn't take off. It went up straight to retest this high and take out the high. Okay? Engage stop losses. Then what happened? As you can see, it didn't really move a lot. As you can see, this thing. So 2.5% is still intact. Okay. Unlike this one. This one moved a lot. This one moved a lot. Then what happened? Another black box. Do you see any other black? No, I don't see nothing. So there is no entry here at all. Okay. So classical black box would assume this as a black box and would interrupt. That is not what we are doing. We are specific and surgical. Specific and surgical. So right there, interesting thing happened. Interesting. We found another black box here. Then we found another black box here. To say, is that a sale? No, I'm not gonna enter a sale. I'm gonna use this to determine a TP2 down there and interrupt there. Look, this is my area of interest. This is point of interest right there. That's my sale. This one is my sale too, so I will sell up there and stop loss still up there. It's my risk, my reward. Okay, reward. Simple as that. Retest. Even if this went without you, you call that sale appreciate for something. Then we have GJ here, JPY. Okay, we have GJ here. So as you can see here, what do you see? The black box right here. You broke, that is a sell. This stop loss is a little too much, sorry. Look, it really came to the 2.5% retest. So since I'm gonna use this week as my TP1, TP2, we have TP3 down this. This I might have interdays here. So interdays here. And put my support up here. Okay. Supply I told you 2.5% is a safe area. It's still safe consequence. You might think this is a breakout, but it is not. You can zoom in and put your stop loss at a grid. Why? This candle's high, the highest high for this black box is at the grid. So your stop loss should be at the grid. Okay? Simple as that. Okay? Now then what happened? Sell. Actually tip it to hit down there, take partials, and up there, dump it for now. Dump it. Okay? Hit dump it. Then what happened here? Then we found another black box. So the one that you sold up is here has now give you more profits down there. Okay. We took partials at 30%. I mean at the bid. Now we take partial down there too. The reason that I didn't enter sell up here is because as you can see TP3 TP for this black box is found here. Most likely TP3 is also hit if that is the case. And if there is no other big black box before this, I will not enter that cell and aim down there. Why? It's because there is no inefficient black box like this one. I don't see nothing around it. So no cell at 30 days. Then we found another black box there. See? Is that a cell? That's risky. That's risky. That's a huge stop loss. That's a huge risk. So another thing I'm interested in this is if price potentially retest up there, and if I see some weakness like a red candle, continuous red candles. So I maybe use this black box TP2 is down there to enter up there. But directly entering a sale, that is too risky, so not gonna happen. Maybe I would do it in a 5-minute time frame, 15-minute time frame. But this any time frame above 1 hour has a huge peak value. So you cannot take that thing lightly. You have to be careful. Any time frame above 1 hour is serious. It is serious. It is different. The 5 minute black box and the 1 hour black box, they are different. So 1 hour is like this and the 5 minute is like this. They have a difference. Okay. So if it was a 5 minute time frame, now having that is aiming these bodies TP, TP1, TP2 down there, take partial. TP3 down there, I will take partial. So then trade non-stop at break even, but that it is a 1 hour time frame, so I can do. So another thing I'm interested here is if price retests and shows me some weakness. As you can see in this case, it didn't show any weakness at all. It followed by big bold candles, so not gonna happen. I will never say that. So down there we have a buy. That is where I'm interested. That's a buy. Okay, that's a buy. When you sell this one, it is this much risk. When you buy this one, this much risk. So they are almost equal, right? They are almost equal. So they are almost equal. Maybe you can use a 1/4 rule, last lot. If you find this kind of huge risky, huge people, huge range of black box, use 1/4 or wait with this. Or you can combine some. Use 1/4 and same. Either if it retests or not, you don't care. Are already in a trade, okay? Already in a trade. So the point here is, since this is very risky, you have to risk a little money than the normal. Okay, than you normally would risk. So how did I buy that? Put my circle down. Okay. This thing is smashed. As you can see, I use a body TP1 and TP2 and TP3 and TP4. Okay. This thing is smashed. I really not up. The other thing is right there, I know that this black boxes TP now change it to the upside. Hi there. Isn't that crazy? After hitting that shit, look, price just collapsed. So this black box TP is waiting for me. All I have to do is wait for a retest, just like this is crazy. This kind of retests is never to be found. Never to be found. Look, my stop loss, my stop loss, my entry. This is risk. This is the reward. That is 1 to 16 or something. Where the hell would you get this kind of thing? Nowhere. Nowhere. That is crazy. That is crazy. When you measure this shit, TP1 and TP2, when TP2 is exactly hit up there and retraces back, you would be flabbergasted. That's crazy. That's crazy. I do not enter a buy based off of this. It's because I would enter based off of this. So I have two things as you can see. This one's black box, this one's black box. So really trade it down, bro. GG is crazy. So anyways, pump it up, tip it weird, then dump it again. It's crazy. Then what happened next? We found another block. Then 1, 2, 3, 4. We dump it. So I'm gonna use this, the body, TP1, TP2, IZ, TP3. Okay. So really, and do not enter a sale unless I see a retest. Okay, as you can see, without retesting it hit TP2, so I'm not no longer interested with this then. Then next what happened? We formed another black box where there 2 3 we broke. Did we? Yes. What is that? We did a running of TP2. TP1 is actually and TP2 is down. Okay. So since TP2 was not hit for this sale, our sales have stop loss absent. Since I am targeting TP3 down there, TP1, TP2, TP3 down there. Okay. How to sell that? Then it fell short and it came back up. What is it? That's another sale. Aiming TP2 and TP3 if extended. If we continue trading in that direction. Then what happened? Is the same thing I sold and I sold. So I made money. So this one hit stop loss absent. But this one the retest hit stop loss but it is at break even, so no one cares. I didn't lose money. I made money. Finally the price just made another black box there. Traded down. This is another huge TP. So we aim for TP2000. Okay. So only thing I'm waiting is for a retest down there. Preferably around this area. Around this area I would be interested for a buy. Is there at halfway targeting TP2. Okay. That's beautiful. Beautiful GJ trade. Some of them lost, but most won. That's what we want. That is what we want. And some of them had a crazy ride. Look, that buy right there is our knowledge that it is going up. That our knowledge that we are waiting and putting the price in the scope and hitting it. That's crazy. So let's go anyways. So this example never in this before. I mean, I'm trying to address every angle of the black box that we should be careful and that we should take advantage of, right? So right here, do you see any black box? Yes. There. 2, 3, there. We block. Is that a sale? Maybe I can use one force. I have 2 options here. I have 3 options really. So I would interest here and buy one force, small lot, or I would wait for a retest, don't move down, or I would enter a sale with small lot and then wait for a retest combining both. When these things happen, when risk is too much and black box is too, the range is high, it's very, very wide. Then is the black box will determine the TP2 is down there. Then the scenario or entry, so it is better to not touch anything. So going to TP3 really down after that, look after this. So that means take profit at TP3, okay? And then the price is down a little more. That is where you trade or start to break it. You determine your TP first British bar, TP1, TP2. Rise your ones at TP2 sheet. You can put your stop loss here. Break it. It has moved relatively, it has moved huge enough as you can see. Okay. That's a huge one. Even if TP2 is hit, that is itself a huge move, which means I cannot give that profit easily. Just because TP3 has to be hit to trade my stop loss doesn't mean I'm gonna just throw money out the window. So when these kinds of dumps like this happen, there is no way other prices coming back up. Okay, just for TP3. It could come up there for TP2, but for TP3 it is rare. So how do I suppose up there to protect my money, protect my. So what happened here? And there is no black box. So we'll take partials at TP3 I told you, and then at this one's TP2 that is down 60% out now. The other running still breaking stop loss from upside to down. Moved. Next you will find the black box. Do you see anything here? Yes. There. The same thing that I showed you before. Do you remember this? So we sold that thing. Put our stop loss out, we sold it, right? So I told you take from that typical right. So this one is the same chart as this one. This one. So you can see it's crazy. So you can see this one. So this one really pumped up, as you can see. This was the start of really huge move upside bullish. So this is pound dollar. So let's go to the next one and let's finish this thing already. I think we have seen this one and there is no point in repeating any of these things. As you can see, I already showed you about this one. Okay, how important our TP2 should be at the next grid. By zooming in, you lessen your risk, okay, by zooming. If you zoom out, it's going to be a huge stop loss. It's the same thing, this one, and this one are the same. So I showed you about this, so there's no point in repeating. No point in repeating. My God, bro, pound house. Pound house, what happened to pound house, bro? It's so crazy. Look at this shit. Oh my God. Look at this. Wow. Now I know, bro. I was trying to find this, any black box that would cause this kind of meltdown. So it was like this. So the price was really rushing down. You take it down there, take it. Okay. Okay, let's go. So do you see a black box? Yes. See? It's a black box. And are we entering this one? No. We are not entering this one. This is a buy option. That's a buy. Stop loss down here. That's risk. I'm not gonna enter a buy. So only way I'm gonna enter is if I see a retest. If I see a retest, TP1, TP2 is opposite. So there is no retest from no entry. Then I'm gonna wait for the next one. Or trade the lower time frames like 15 minutes or 30 minutes. So they give you a lot of black box opportunities, lot of setups. And what happened here? Another black box, you determine your TP, then another here, then this TP1, TP2 is hit down there, that's why we pump it. TP2 is hit, trust me. So, alright, so here, what happened here? 2, 3, is that I said? Is that even? Is that even? Even risk-wise good? Is that even risk-wise good? Is it? Do you think? I don't think it is good. Look at this. But anyways, I would have entered this bro. I'm not, if it was like 15 minutes or 5 minutes, I would have entered this as a, since it has less risk. Since this is a 1 hour, so I'm gonna pass this. If this week right here was around there, I would have entered this here based on this. Okay, simple as that. It is simple as that. Then let's say, okay, let's just say I entered this. So I'm gonna use my tip as the same TP1 and my entry is up here and TP2 hit, so I take 30% off and I'm gonna wait. So unfortunately, this price came back up and hit your stop loss up there. So there's nothing you can do. There's nothing you can do. Then another formula. Then we change direction. It's a downside. TP1, TP2, right there. It's TP2. That's why you see this. It is not a coincidence, bro. This thing is not a coincidence. Look, exactly right. Okay. Then what happened? I'm not gonna enter a sell or a buy, but I'm gonna use this for TP projection. So what happened? As this thing started dumping, then we made another black sale. Trust me, I would have sold that one. I would have. Okay, I would have. Maybe that was in at midnight or Asian session or something. But at that time, you would not enter a trade because the spread is wide. Look, something like this. You cannot enter at that time. These kinds of jumps will occur. So right there, but most likely we would have missed this trade. Most likely you would have missed this trade or intentionally left this trade alone. Leave it alone. The spread is too much. You cannot enter a trade at all. It's swinging high and low. It's crazy. Fast. And next thing, it closed up there, right? This bullish candle. Have a closer look. This bullish candle closed up there. Okay. Then this bullish candle again opened down there. It shouldn't have done that. It should open up there and then trade wherever it would like to trade. But it opened down there, so it shows you there is some kind of illiquid market here. This is some kind of illiquid. It's not liquid at all. Okay, Asian session, there's no much traders there. There's no much, and there that is the hour. That is a time where the algorithm shifts or sorts through some kind of it sorts out its next day's direction and everything. So there will be some kind of corrections, jumping from up there to down there, and actually sometimes up there from open down there and go close up there, then close it down by trading down the gap here. You cannot leave a gap here. So, so most likely you would have missed that one. It's in Asian session or something. If you didn't, then that's a sale. I sold that thing. Stop loss trap there. So price finally hit my stop loss up there. Okay, it's a loss. Simple. Simple. It is a loss. Then here determine your TP1, TP2 is up there. Okay, TP2 is hit up there. Right. So this setup is done. We found another one. See? Then 1, 2, 3. Why is there a buy up? Again, I would have bought that one. Look, stop loss down. As my interest as risk, 1 to 1 at least, 1 to 1 reward. So I would have entered that buy up there, 2.5% broken, stop loss down there. Okay. Then this actually ended up losing. Is lost. So I lost here, right? So now what is the price? Now the price dumped, hitting my stop loss and dumped. Okay. Then what happened? This thing traded down, broke the downside. Then traded up. I can enter that sale. Look, my stop loss is still up there. My entry right here. You can see. My risk, that is my reward. That's 1 to 2. That is 1 to 2. That is 1 to 2. So that's amazing. That's amazing. Okay, that is amazing. As I said, that's a sale down there. That is a retest. That's a sale, not there. That is shows you that we are moving down. That's a signal. That's just a signal, not entry. Okay. As there, the same thing happens. We take partials at key levels. Based off of TP2 is almost your entry. No, your entry is up there. I'm sorry. So raise it partial 30% of raise. At TP0 at another 30%. At TP4 another 30%. And you trade your stop to break even. Okay. So another thing happened to 3. No entry here, only for projection. Okay, for projection. What projection? TP1 and TP2. Right. I have this black box TP1, TP2. So still loading. Another black box and another black box. Right there, it broke. It closed where? Up there. What is that? That's a sell. That's a sell. It's because look, it closed up there. It closed down there. I do not interested. Up there is I'm interested since it has a little bit less risk, as you can see. And aiming 1 to 2. 1 to 2. So most likely I would have interested. Okay. Simple. So next time would be talking about the same thing. It's found out pound is like crazy this week. Look, pound, I mean, low Aussie just held strong, but pound Aussie is very weak. Then what is this? this I will talk about this in the next one. So for now, thank you for watching. I will see you in the next one.